Yo, what's up, Bitcoin Bulletin fam? Get ready for a rapid-fire blast of the biggest crypto news. First up, we're diving deep into Bitcoin's wild ride with gold. Are they still linked, or is something new brewing? Stay tuned. Next, we've got Dominic Basulto from the Motley Fool breaking down exactly why Bitcoin is pulling back right now. Is it macroeconomics, or are investors just looking elsewhere? We've got the details. Then, we're exploring the insane rise in Bitcoin mining difficulty, even as the price swings wildly. What does this mean for the network's fundamentals and future price action? You'll find out. And finally, a dormant Bitcoin whale, last seen when BTC was just $12, has awakened and is moving funds. What could this mean for the market? All that and more right after this. Hit that like, subscribe, and ring the notification bell so you never miss an update. Bitcoin and gold, the uncoupling. For years, Bitcoin and gold have been seen as kindred spirits, especially during times of economic uncertainty. But recently, something has shifted dramatically. Over the last 30 days, Bitcoin has shown a negative correlation of -0.53 with gold, a stark departure from their historical tendency to move in tandem. This isn't just a minor blip, it's a fundamental change in how these two assets are behaving in the market. What's driving this divergence? Bitcoin's inherent volatility, a characteristic that sets it miles apart from gold's stability, is a major factor. While gold has long been the go-to safe haven, Bitcoin's price can swing wildly based on market sentiment and news cycles. This makes it a very different beast to manage in a portfolio. Adding to the complexity is the surging institutional interest in Bitcoin. Major financial players are now pouring significant capital into Bitcoin, viewing it as a high-return asset. This growing acceptance, coupled with an increasing number of crypto-related financial products, is drawing more institutional attention than ever before. Historically, gold has often outperformed Bitcoin during major crises like the 2008 financial meltdown and the COVID-19 pandemic. However, Bitcoin has also seen explosive growth in bullish markets. This fluctuating correlation means investors can no longer assume Bitcoin will act as a simple hedge against economic downturns when gold is performing well. It's becoming more like a risk asset, similar to equities, especially as institutional adoption grows and regulations become clearer. This decoupling presents a significant challenge for investors. Adapting to these changing dynamics is crucial. Bitcoin might increasingly correlate with stock market movements, demanding a more nuanced approach to portfolio diversification. Investors need to carefully consider the individual risk profiles of both Bitcoin and gold and adjust their strategies accordingly to navigate this complex new landscape. So, is Bitcoin truly shedding its digital gold mantle? And what does this mean for your portfolio? Don't go anywhere, because next, Dominic Basulto from the Motley Fool reveals the 3 key reasons why Bitcoin might be pulling back right now. Bitcoin's summer slump, what's really going on? After 2 years of explosive triple-digit returns, Bitcoin is showing signs of weakness in 2025, down 6% in the last 30 days and only up 20% for the year. This pullback has crypto investors on edge, wondering if the party is over. But why is this happening? Dominic Basulto at the Motley Fool points to 3 critical factors. First, Bitcoin may no longer be uncorrelated with the broader market. Historically, it zigged when other assets zagged, making it a unique hedge. However, it now appears more susceptible to macroeconomic conditions. Slowing job growth, rising inflation, or trade tensions could be creating stiffer headwinds than previously thought. Institutional investors, who now drive much of Bitcoin's adoption, are closely watching potential Fed rate cuts, highlighting this newfound sensitivity. Second, while Bitcoin still dominates the crypto market cap, investor attention is diversifying. New digital asset treasury companies are emerging, pooling funds to invest in specific altcoins like Ethereum, Solana, and XRP. Furthermore, recent legislation is poised to create a boom in the stablecoin market, potentially channeling trillions of dollars away from Bitcoin. This mirrors the pattern seen in the 2020-21 bull run, where Bitcoin surged first, followed by altcoins, and then speculative meme coins and NFTs. Finally, and perhaps most concerning for long-term holders, is the timing within Bitcoin's 4-year cycle. The Bitcoin halving, typically a catalyst for massive price runs lasting 12–18 months, occurred in April 2024. We are now 17 months into this post-halving period. History suggests that a blow-off top, a rapid surge followed by a steep crash, could be imminent, similar to the gut-wrenching 64% decline in 2022 after the previous halving. Signs of this speculative excess are everywhere. Billions poured into risky digital assets, money-losing businesses morphing into crypto treasuries, and Wall Street reassuring investors that this time it's different. For those considering investing, due diligence is key, and keeping investments small is wise, as this summer pullback could signal a turbulent final quarter. So, are we heading for another crypto crash, or is this just a temporary pause? Stick around, because next, we're digging into the surprising strength of Bitcoin's network fundamentals, even as the price fluctuates. Bitcoin network strength surges amidst price volatility. Bitcoin is currently locked in a tight battle, hovering between $110,000 and $113,000, leaving traders uncertain about its next move. Yet, beneath the surface of this price action, on-chain data from Martin reveals a picture of remarkable network health and fundamental strength, defying short-term market sentiment. Despite the choppy price action, Bitcoin's network fundamentals are not just holding steady, they're improving. Key metrics tracking network activity and adoption suggest that recent price swings are more a reflection of broader market dynamics, like liquidity shifts and macroeconomic uncertainty, rather than a loss of Bitcoin's own momentum. This divergence is critical. While charts show hesitation, the underlying network signals resilience and long-term growth, indicating that participants are betting on higher prices ahead. A clear indicator of this underlying strength is the continuous rise in Bitcoin's mining difficulty, which is hitting new all-time highs. Difficulty adjusts every 2 weeks to maintain a consistent block production rate, and its persistent increase signifies that miners are dedicating more computational power to secure the network. This dedication underscores a strong confidence in Bitcoin's long-term value and highlights the robustness of its decentralized infrastructure, even amidst market turbulence. Currently, the average cost to mine a single Bitcoin is around $99,100. With BTC trading just above $112,000, miners are still profitable, but their margins are narrowing. A significant price drop below $100,000 could risk miner capitulation, potentially leading to temporary selling pressure. However, historical patterns show that periods where mining costs approach market value often precede strong upward price movements, as Bitcoin tends to rebound to maintain mining incentives. The chart analysis confirms this cautious optimism. BTC has managed to defend the $110,000 support level multiple times, but needs to reclaim and consolidate above the 200 simple moving average, $113,860, to signal a bullish reversal towards $116,000 and ultimately $123,217. A break below $110,000 could trigger a sharper correction, but the overall network fundamentals suggest that the foundation for a sustained uptrend remains firmly in place. So, even with price uncertainty, the network itself is stronger than ever. But what happens when a sleeping giant finally wakes up? Get ready, because our final story is about a dormant Bitcoin whale making a massive move. Dormant Bitcoin Whale Awakens, moves funds to Kraken. A significant event has just unfolded in the crypto world. A dormant Bitcoin whale, inactive since Bitcoin traded at a mere $12 per coin, has suddenly awoken and is moving substantial funds to the Kraken exchange. This awakening after years of slumber is sending ripples through the market, suggesting a potential shift for long-term holders. This whale's activity is particularly noteworthy given Bitcoin's current price action. After years of dormancy, the movement of these funds indicates a potential decision to take profits or reallocate assets. The fact that these funds are being sent to a major exchange like Kraken suggests a move towards liquidation or a strategic repositioning in the current market environment. This event could signal that some long-term holders, who have seen astronomical gains since Bitcoin's early days, are now looking to cash in on Bitcoin's historical appreciation. The implications of such a large, previously inactive entity re-entering the market are far-reaching. It raises questions about the overall market sentiment and whether we are approaching a peak where early adopters are realizing their profits. Such movements can sometimes precede significant price fluctuations, especially if the whale decides to sell a substantial portion of their holdings. Investors and analysts are closely watching to see the full extent of this whale's actions. Whether this is a single profit-taking event or the start of a larger trend among long-term holders remains to be seen. However, the awakening of such an old and significant player is a major development that could influence short-term market dynamics and provide insights into the mindset of Bitcoin's earliest and most dedicated investors. This whale's move is a stark reminder of the massive gains early adopters have seen. But what does it all mean for you, the viewer? We'll wrap it all up in our lightning round recap right after this. Don't go anywhere. And that's a wrap on today's Bitcoin Bulletin. We saw Bitcoin's correlation with gold take a nosedive. Dominic Basulto at the Motley Fool explained Bitcoin's pullback is likely due to macroeconomics and diversifying investor interest. The network's mining difficulty is hitting new highs, showing fundamental strength, and a whale dormant since $12 BTC has suddenly moved funds. Don't miss out on the next big crypto moves. Hit that like button, subscribe to Bitcoin Bulletin for all your crypto news, smash that notification bell, and follow us on all social platforms for real-time updates. We'll see you in the next one.